Bismillahirrahmanirrahim. Selamat datang ke Bank Negara Malaysia. Pada sidang akhbar ini, pertumbuhan ekonomi negara serta perkembangan monetary dan kewangan pada suku pertama tahun 2015 akan diumumkan. Ekonomi negara mencatatkan pertumbuhan kukuh pada suku pertama, iaitu sebanyak 5.6%. The global economy continued to expand in the first quarter of the year with diverging growth momentum among the major economies. While the US and UK economies registered broader improvements, the recovery in the euro area and Japan progressed at a more gradual pace. Growth in the Chinese economy was lower in the first quarter at 7%, following efforts to rebalance key drivers of the economy. Targeted policy measures by the government provided some support to economic activity. In the region, growth was sustained by the expansion of domestic demand. The Malaysian economy registered a growth of 5.6% in the first quarter of 2015, driven mainly by private sector demand. On a seasonal adjusted quarter-on-quarter basis, the economy increased by 1.2%. Private sector expenditure remained the key driver of growth, expanding strongly by 9.6% during the quarter. Private consumption grew by 8.8%, while private investment expanded by 11.7%. Public sector spending improved during the quarter, with public consumption recording a stronger growth due to higher spending on supplies and services amid moderate growth in emoluments. Public investment turned around to record a positive growth due to higher spending on fixed assets by the federal government. Net exports, however, recorded a negative growth of 10.2% during the first quarter. So this means that the domestic demand was the main driver of growth during the first quarter, explaining the higher performance. Private consumption expanded at a pace of 8.8%, supported by stable employment conditions and higher wage growth. Front-loading of household spending prior to the implementation of GST contributed to the strong growth in private consumption. In addition, flood relief efforts also provided some support to private consumption spending. Private investment retained its double-digit growth performance to expand by 11.7% in the first quarter, underpinned by capital spending in export-oriented activities, including the electrical and electronics subsector and the resource-based manufacturing sector, and the transport-related services sector. Capital spending also reflected the continued progress in the long gestation projects, including infrastructure projects, theme parks, hotels, and the expansion in the production facilities in the electrical and electronics industry. Gross export growth, however, during the quarter contracted by 2.5% in the first quarter due to the decline in the growth of commodity exports and resource-based manufactured exports. Higher base in the first quarter of 2014 also contributed to the decline in gross exports, because we had a significantly high growth in the first quarter of 2014. Growth in imports moderated to 0.2%, due mainly to the slower growth in intermediate imports. Nevertheless, capital and consumption imports expanded further, supported by continued strength in domestic demand. The trade balance stabilized at 21.3 billion ringgit during the first quarter. The current account surplus, however, improved to 10 billion ringgit, or 3.7% of GNI during the quarter. So this is an improvement in our current account surplus. And this is due to the sizable surplus in the goods account amid lower deficits in the services and income accounts. Our international reserves amounted to 105.8 billion US dollars, and it is sufficient to finance 8 months of retained imports, specifically higher than the 3-month international threshold. And the reserves to short-term external debt coverage is 1.1 times, and it's sufficient for a country with a relatively high degree of financial openness. The high level of international reserves, together with a more flexible exchange rate regime, continues to serve as an important buffer against potential external shocks. As at end March this year, Malaysia's external debt stood at 768.1 billion ringgit, equivalent to US dollar 205 billion. And the rise in external debt in ringgit terms was mainly due to the valuation effect from the depreciation of the ringgit. So the debt increased not due to increased borrowing, but due to the depreciation of the currency. So excluding valuation, external debt was actually lower during the quarter, due mostly to the repayment of offshore borrowing by the banks and non-bank private sector, as well as by the federal government. There was also liquidation of Bank Negara monetary notes by non-resident. As you all know, we follow the new definition of external debt, which includes ringgit-denominated papers that are held by non-residents. And right now, Malaysia's external debt position remains manageable and poses a low risk to the economy. On the supply side, the growth in the first quarter was supported by the major economic sectors. The services sector grew by 6.4%, with the expansion in all subsectors, particularly consumption-related subsectors. The manufacturing sector expanded by 5.6%, mainly attributed to the stronger performance in the export-oriented industry, particularly reflecting the strong production in the electronics and electrical cluster. The construction sector increased by 9.7%, underpinned by non-residential and residential subsectors amid construction activity in the industrial and commercial buildings, as well as properties in both the mass and high-end markets. The mining sector recorded a growth of 9.6% amid stronger crude oil production amounting to 690,000 barrels per day, the highest since the third quarter of 2008. And this was driven by the continued rise in the output from a new field offshore in Sabah. Meanwhile, the agricultural sector contracted by 4.7% amid lower output of crude palm oil following the floods in the eastern states of Peninsular Malaysia. Turning to inflation, headline inflation was lower at 0.1% in the first quarter. This was attributed mainly to the decline in prices in the transport category, following the implementation of the managed float fuel pricing mechanism in December 2014. Domestic fuel prices were revised downwards in January and February, contributing to the 21 to 31 cent decline during the quarter. In addition, inflation in the housing, water, electricity, gas, and other fuels category also moderated due to the downward revision in the electricity tariff in March of 2015. On monetary policy, the MPC maintained the OPR at 3.25% on 7th May, and the Malaysian economy is expected to remain on a steady growth path, with domestic demand remaining as the key driver of growth. Headline inflation is expected to trend higher for the rest of the year following the implementation of the GST. This is expected to be partially offset by the overall global commodity and energy prices. The underlying inflation is expected to remain contained amid the stable domestic demand conditions, and the current stance of monetary policy remains supportive of growth. Moving forward, the MPC will continue to monitor and assess the balance of risks surrounding the outlook for growth and the outlook for inflation. While the risks of destabilizing financial imbalances are contained, these risks will continue to be monitored. The ringgit and regional currencies continued to be volatile in the first quarter, and this was mainly due to the uncertainty surrounding global monetary conditions. The concerns on global economic outlook following the IMF and World Bank's downward revision of 2005 global growth projections. The ringgit also faced adjustments during the first quarter due to concerns over the impact of the lower crude oil prices on the Malaysian economy. Overall, the ringgit depreciated against the US dollar by 6% during the quarter. Against other major currencies, the ringgit had a mixed trend. The ringgit depreciated against regional currencies between 1% and 7%. The ringgit, however, appreciated since April. Between the 1st of April and the 13th of May, the ringgit appreciated against the US dollar by 3.1%, so some retracement was seen. The ringgit also appreciated against the Japanese yen by 2.8%, but depreciated against the euro, the Australian dollar, and the pound sterling. The ringgit appreciated against most of the regional currencies. This is following the slight recovery in the crude oil prices. Net financing through the banking system and the private debt securities market increased by 8.3% as at end March, amid more moderate growth in net issuance of private debt securities. So we are seeing that the private sector is well supported by the financial industry. While the growth of our outstanding banking system loans remains stable, the growth outstanding loans to small and medium-scale enterprises continued to be strong, growing at 17.2%. And this is important because the SME sector remains a key driver of growth in our economy. The loans disbursed by the banking system to SMEs was also higher at 66 billion ringgit during the quarter, and this compares with during the period 2010 and 2013, it was on the average of 48 billion ringgit. So we are seeing that banks are extending more financing as part of their portfolio to the SME sector. Turning now to financial stability, domestic financial stability has been preserved amid continued volatile financial and commodity market conditions during the quarter. Overall, stability continues to be supported by sound and well-capitalized financial institutions, reinforced by our regular stress tests by the bank, which reaffirms the capacity of the banks to weather severe financial market and macroeconomic conditions. The capital buffer remains in excess of the regulatory minimum, sustained at well above 90 billion ringgit. So we have a solid and sound banking system. The expansion in household borrowing moderated further to 9.2% at the end of 2015, the first quarter of 2015, to account for 87.6% of GDP. This was driven by slower growth of 3.8% in the financing for personal use, and house purchases, which increased by 12.2%. So in effect, we are seeing the continued effectiveness of the macro-prudential measures that we have implemented since 2010. Prudent lending standards continue to be observed, with 80% of the new loans extended to borrowers with an aggregate debt service ratio of below 60%. And the overall quality of the borrowing portfolio remains sound, with impaired loans and loans in arrears remaining at very low levels. The growth in domestic borrowing moderated to 7.4% as at end March 2015. The overall quality of banks' exposure to the business sector remains high, as reflected by the low impairment and delinquency levels. The lower commodity prices and lower ringgit exchange rate have had a minimum adverse impact on the financial strength of most businesses. Debt servicing capacity of businesses measured by the median interest coverage ratio remains at a comfortable level at 6.3 times. Some businesses benefited from the lower input costs from lower commodity prices and higher ringgit equivalent earnings on export proceeds. Although oil and gas players and crude and palm oil producers recorded lower interest coverage ratio, the level remains above the prudent levels of 2 times. Potential losses from bank credit exposures to businesses are further mitigated by the strong financial buffers accumulated by the businesses. As at end 2014, current assets of businesses stood at 1.8 times of current liabilities. Going forward, global economic growth is expected to improve, although at a moderate pace. While there have been improvements in the advanced economies, the pace of recovery has continued at a modest and uneven pace. Meanwhile, growth in the regional economies will continue to be supported by the expansion in domestic demand. Downside risks to this outlook remains as international financial markets continue to be affected by shifts in global liquidity and investor sentiment. For the Malaysian economy, domestic demand will remain as the key anchor to growth, and although private consumption is expected to moderate as households adjust to the introduction of the Goods and Services Tax, that's the GST, consumption expenditure will be supported by the steady rise in income and employment. Investment activity is expected to be led by capital spending in the export-oriented industries, the services sector, and for infrastructure projects. On the external front, while export growth will be affected by lower commodity prices, manufactured exports continue to benefit from the recovery in global growth. The Malaysian economy, therefore, is expected to remain resilient in the face of this uncertain environment and is expected to remain on a steady growth trajectory. That concludes the presentation for the performance of the first quarter. However, I do want to mention about the rebasing of our GDP data to rebase to 2010 base year. So with effect from the first quarter of 2015, Malaysia's gross domestic product in constant terms is now rebased to 2010 prices from 2005 prices. This rebasing is a planned periodic exercise and is a standard practice for statistical agencies worldwide. And so the next one is done every 5 years, so the next one will be in 2020 actually. This exercise improves the relevance, comparability, and quality of Malaysia's GDP computation, and the rebasing has had minimal implications on Malaysia's economic structure, growth, momentum, and key macroeconomic indicators. Nominal GDP was revised upwards by 3.4% in 2014, and this revision is modest and in line with the experience of other economies that recently undertook this exercise. In general, the structure of the Malaysian economy is broadly unchanged, and by economic activity, the services and manufacturing sectors remain the key drivers of growth over the 3 quarters of real GDP. The increase in the share of the commodity sector mainly reflects the higher commodity prices relative to non-commodity prices in 2010. And by expenditure, domestic demand, particularly private sector spending, continues to be the anchor of growth. And the increase in the share of net exports mainly reflects the higher relative prices of commodity exports in 2010. And the growth in both real and nominal GDP remains broadly similar to the previous series, and this suggests that the underlying growth momentum of the economy is unchanged following the rebase exercise. And of course, we have a box article published in the quarterly bulletin issued in conjunction with the release of these numbers that provides a detailed explanation on the rebase exercise and the methodology that's used and its implications. So that it concludes the presentation, and we are pleased now to respond to questions.